Hello and welcome back to another video. For those of you who don't know me, my name's Jared and I'm just a guy on YouTube who enjoys investing and all things financial. So today in this video I would like to talk about a few things. It's going to be a few stocks. I'm sure you can see them right up there in those tabs there, but I wanted to start with the Federal Reserve's FOMC statement, and everybody was kind of expecting them to keep it stagnant, no up, no down. And it was kind of hoped that we would continue cutting rates, right? So they said that with inflation up a little bit and job market, jobs kind of remaining low and unemployment rate showing signs of stabilization, they would rather just keep things flat. So there was no increase or decrease. And that kind of can scare and rattle the market a little bit. People don't really know exactly what to do sometimes. So we're going to get into what the market did today, which is actually quite impressive. So we're going to go with Meta. In the previous video of my top stocks to watch for the beginning of 2026, I actually mentioned Meta. It was one of them. So I believe right after the video, the stock dropped to about $606, somewhere in there. And so that was a great opportunity to pick some up. I know I picked some up, I believe around 608. And today we are up almost $70, a little over 10%. This is after they reported earnings, and strong earnings at that. It's just fantastic. We got a gap up on the chart. We could be looking at tomorrow. Hopefully, it continues and we continue rallying. It'd be great to get back up to that 760, somewhere in there. And this is going to be a little bit of an input from me, and the way I do my investing is when a stock goes up massively, use that as an opportunity to take profits. And by that, I do not mean to just go out and sell all your shares and then watch it go up to 760 and 800 and all-time highs, and it just keeps going to the moon, right? The idea behind when I'm talking about pulling profits is actually to set yourself up with some stop losses. So use a stop loss. So I bought in at 608. We're right around in here in this range right down here. So we shot up back over a pretty solid line of resistance that we kind of messed around with for a few months, actually. And we shot up above it, right? So the next day, we continued going up above the resistance. Right there would have been a good opportunity to set some stop loss at around 630. You want to be just below that resistance bar, 641, because it doesn't just hit the resistance. If it drops back down to it, it may break through slightly and rebound. You do not want to get caught right before that rebound, right? You sell everything off and then it shoots up another 20 bucks. We don't want to miss out on gains, but we also don't want to hold on to a stock forever, watch it go to all-time highs, and we're looking and trying to find a good opportunity. We don't know when the high or the rally is going to end. So we don't sell, and then we just watch it gap down and tank, right? So I would move my stop loss up to at 641.86. I would move my stop loss up to about 638, somewhere in there. So there's a little bit of room because I don't want to sell it. I'm just looking at if we bounce off that next line of resistance and we come dropping straight back down, then I want to sell off before we continue that downtrend. I don't want to be stuck with my pants down holding on to this stock for years because I'm just waiting for me to become positive again. Now, I'm not saying Meta is going to be that case. I'm just using Meta as an example and Meta's chart as of right now. So following that resistance, we move back up past this resistance line here at around 667. That was fantastic. You know, we hit that resistance, we dropped and we closed, and then we opened closer to the resistance. We broke through, we closed above it, We came back down, we met it, and then we found that as our new resistance line. So since we are now using this 667 as resistance, now that we shot back up above it, I'm going to move my stop loss up. I am going to actually meet that 667.64. So now 667 is my new line of resistance that I'm gonna hope we don't come back down to. But if we do come back down to it, I want to be able to sell off before we go crashing, right? So that's exactly what we did there. And then we had a gap up due to earnings and everything going on in the market. You know, Meta hasn't moved for about a year and it's been stagnant, and it showed that it is still going to be strong, and it had great future forecast. So future guidance, sorry. And we gapped up huge today. So we went up about that $70, 10%. So right now, there is not a proven resistance line up here. You do have the moving average, so you could always try to use the moving average to set your stop loss. I'm actually going to see where tomorrow goes before I raise or lower my stop loss. Once again, just don't want to be caught missing out on all the profits and holding out for a worse tomorrow. But, and this is the key, using some kind of strategy to your investing is you have a plan, you stick to it. My plan is I want to use this to leverage or to gain profit, right? Make money. So I move those stop losses up. If I want to be more conservative, I move them up less. If I want to be a little bit more of it's a stock I don't believe in, I was just in for the value, whatever that may be, I may move that stop loss up a little bit more because I don't really care about the stock. If it sells, it sells, right? And the other factor to this method of trading and making sure you're taking your profits is you got to remember, if you end up selling at a profit, you got to be happy with it. Don't play the what ifs. Everybody has this what if game of, well, if I would have just hold, what if I would have not sold and it goes to $900? Well, that would have been great, but it's a market and it is a gamble to hold, sell in that fashion. So you want to hold until 900. Well, what happens if it never hits 900? You're just stuck holding it. That's not also a good thing. You could have been making money elsewhere. So pull those profits, make the money, move on, find the next stock. And if it comes back down and you want to reinvest in, that's great. That's awesome. You can catch another rally just because you sell at $700 and it goes up to 900 and it drops back down to 750 and it's priming up again during another earnings cycle or whatever it may be. You can always reinvest into it, right? When you scroll back a little bit, you had great buying opportunities back here at 486. If you would have stop lost and sold out, then we had another opportunity over here at 580 something. We had another opportunity that we just took up and bought in at that 608 mark over here. So you don't want to be the guy who buys here, holds because and not set up the stop loss and just keep holding because you think it's going to continue. And then you watch it come right back down, and now all of a sudden you're down, you're negative 20, 30, 40%, and you don't have the heart to sell at a loss, and you just keep holding forever. You're missing out on other opportunities by doing that. So come up with your own investment strategy and your own plan that fits you best, and make sure you stick to the plan. If you want to set the stop losses, great. If you'd rather do options trading, great. Do your research. Make sure you're doing something that suits you and suits your risk tolerance. I like this stop loss strategy so that way I don't get caught when I'm hitting all-time highs. I'm up 80, 90, 100%. then it's a great opportunity to raise that stop loss. So if the next day it comes crashing back down, hopefully it sells off and I get to claim some of that profit. So why is Meta up as much as it is? Well, it beat pretty high on earnings. Last video, when I did the stocks to pick, I discussed why their earnings they missed so heavily in Q3 2025. So they just crushed Q4. It wasn't really surprising. Their EPS growth from trailing 12 months was down slightly, but their EPS growth was higher quarter to quarter. So we're comparing it there. And then they had great future outlooks. They had good cash flow. They had great investments. They're using their money wisely. They brought down operating costs. I may do another deep dive into it just to see where it's at, so that way I can show you guys how to read the income statement and the earnings reports, because that is going to be key. So now we're going to discuss this in a little bit of a different light. And this is the reasons why people say it's not a good idea to trade earnings. Now, earnings season. It's normally a fantastic season, especially for long-term investors. You don't day trade the earnings reports because things happen and you don't expect it. And we're going to get into the very next stock, and this kind of explains why. If you're going off of the sentiment and or earnings. So Meta, up, great, love it, awesome. Down a little bit after hours, but that's okay. It had a massive run. That tends to happen. We'll see where it goes to tomorrow, and then I will set my stop loss accordingly. Microsoft, down 10%, almost $50. So what happened with Microsoft? I'm a firm believer that Microsoft is setting up to essentially do what Meta did, but not to the same extreme. I believe Meta is the stronger company, and there's a reason why, and it's mostly fear, but we'll get into it here in a second. So we had a gap down, and they call it a hanging man here. So what actually happened is we ended up busting through these lower resistances. We gapped down, we came back, and we actually landed above it, which is good. I'm glad that they landed above it. Hopefully, some people didn't get sold out of puts or their calls or options trading. So, with this being said, we're going to take a look at the dividends and their earnings. Well, looky there, they beat, right? Quarter two beat. Most people are just looking for a beat. Well, they didn't beat as strong as previous quarters. Still fine. They did beat. They had more revenue. Their growth was fantastic on both of these. Their growth was fantastic. The problem most people had with it, and the reason why I believe that it sold off, was its backlog of their backlog of orders and their future money coming in, essentially, right? A big chunk of that is actually going to be OpenAI. And everybody right now is worried that OpenAI is not going to meet the earning potential that they've been pretty much being bought for and people have been investing in. And with all the devaluations and from all of Microsoft's chips and everything they've invested in has been doing fantastic. But if their future revenue is going to be affected by their backlog being mostly full of the OpenAI, that is what people are scared of. And that is why I believe we had a sell-off. Now, and CapEx spending, what they're spending all their money at. It was actually much higher, about, I believe, 9% higher than what it was expected, which actually causes some panic and some fear in it, because you don't know if they still have the lead on the horse, right? If they're just kind of going out of control and you don't know where they're going to fall. A lot of people, especially if they were sitting up, they're going to sell off and they're going to wait and see what happens because they don't want to lose all their profits, right? So I'm going to actually take a deep dive into Microsoft probably this weekend. I'm going to do that research on my side and see if this turns Microsoft into a buying opportunity. I believe it is approaching a buying opportunity. And the reason why I say that is because of the lines of resistance on the chart. So obviously we just broke through a couple of lines of resistance, but we have a very massive support down here at 404.28. So followed by another line of resistance at 392.17. And when you come back here, the last time we were down at 392.17 was 04/29/2025, and we had a gap up, and we just skipped this line of resistance. But that line is going to be from further back. However, everybody who bought here is going to be okay selling at this line still. Everybody who's up here, they do not want it to come down to the lower resistance because they're losing all their profits, right? So I am kind of looking into the future of what I foresee happening for myself, and I see myself buying into Meta around 405 to 410. I believe we're going to come down and see that resistance, and I think that's going to be a good buying opportunity. That also allows us to drop down to the next bar of resistance and not hurt too much. And obviously, once we start going back up, I'm going to set some stop losses. You can use stop losses on your initial investment. If it's at 410, you buy at 410, you set a stop loss at 405. The most you can lose, ideally, if everything worked out perfect, meaning there was enough people buying at 405, that you sold off your entire trade, that you would only lose at most $5 per share, right? So stop losses are a great tool. If you don't use them, I would look into it. It's a great way to kind of protect your gains and protect you from severe losses. So with that being said, the CapEx was huge and the backlog is kind of scary when it's so much reliant on a single portion of the industry, OpenAI. So we're going to move on here. We did Meta, Microsoft, now we're moving into Adobe. Adobe was my number one stock pick, and we're just kind of cruising. We came down from where I originally was calling it as a buy. So right now, I'm just still in that same mode. As we come down, I'm probably going to be picking up shares here and there. I'm going to slow down a little bit because Adobe is becoming my number one stock or own stock, and I don't want to put all my eggs in one basket. But we do have earnings coming up here on March 12th. So with that being said, Adobe beat the last 4 quarters. Once again, I did a little bit more of a deep dive on Adobe in the previous video, the stock picks for January. And on March 12th, I'm just expecting Adobe to keep killing it. As long as Adobe keeps killing it, I don't have anything to worry about. I don't have any worries in the world. I think it's going to keep crushing, and it's just going to keep chugging along. And at that point, we're going to start proving all the haters wrong, right? So we did hit a low today, 248.60, 284, sorry, a little bit of dyslexia there, 284.60 on today. So to me, it was a good opportunity to buy. I did not buy though. This is going to be the share or the stock that I bought, which was CRM Salesforce. I bought a little bit of CRM today, and they're down 6%, almost $14, and they are in the same boat as Adobe. They hit a new 52-week low today. So when we take a look at their chart, we are set up for a gap down, and with the medium stop next line of resistance being 198.88, we could be bouncing all the way down to there. We have a massive bar of resistance at roughly 193.31. So once again, I'm still a buy. I believe that they're hurting right now, and they were the second worst performing stock in um, where was it? I just was reading up on it in Nasdaq. Yep, yep, in the Nasdaq. It was the second worst performing stock today, which is kind of comical, kind of funny, but once again, I'm seeing the value in the long term. So they beat on the last four earnings. They got great growth, exactly what we're looking for. And we're just going to wait until February 24th. And I'm going to stay content. I think they're going to keep crushing earnings. It's going to be I'm hoping it's going to be a fantastic day. Leading up to earnings, they may raise a little bit. So hopefully, if that is the case, you were doing your research beforehand and buying at your own prices and going from there. And yeah, we'll see how it plays out. Okay, so people call this one PayPal for a reason. PayPal. It's kind of one of those stocks that it just borders on, is it worth hanging on to? I think PayPal gets a lot of hate and criticism because of cryptocurrencies, stablecoins, things along those lines. People are looking at the way of the future. I think PayPal is still going to be a part of the future. Um, it's just the way that it is. I believe we're going to come down to that 51.29 as well. So we still got a little bit more hurt coming our way. We did hit a new low today. It is what it is sometimes. That's why we buy for the long run. And once again, the stop losses, that helps out tremendously when it comes to it. They had a couple of downgrades, which hurts. And yeah, so not looking too hot in the price performance. The 10-year is almost to zero. Oh no. But at any rate, I think they have some earnings left in them. I think, they beat the last four earnings. They got pretty decent growth going still. So we're going to hold out. It's coming up here soon, February 3rd. So we'll see what they do on February 3rd next week. That's exciting. I'm hoping for some good things from PayPal, and hopefully we can get a little bit of growth out of them. That'd be cool. So United Healthcare. I just did another video on United Healthcare, and I went through some of the stuff with them that they're just the face of the market that's getting pummeled. They are the one getting pummeled the worst. And they had this gap down. We're still hanging around that resistance, 291.91. And so we're just above it, if I'm not mistaken. So hopefully that builds up some upward support for us, some strength. That would be great. But with the upcoming news and everything going on, I do not see United Health Group doing fantastic almost any time soon. I just believe that the healthcare industry is not going to be the happening industry at the beginning of this year. There's too much going on with the Obamacare, with Trump trying to go after it, and the Republicans were trying to put up a plan for their own healthcare system. I haven't even looked into if that fell on deaf ears or if it's already gone. So we're gonna continue holding on United Health Group just because I want to see where it goes. When you look at the last few earnings here, not too hot, right? And terrible growth rates. But they are attempting to become a stronger company, and sometimes the pain's got to happen for us to be stronger afterwards. So I think that's kind of where United Health Group is current. So ConocoPhillips. This was also one of the stocks that I shared in that same video that I did a little bit of a deeper dive. Highly speculative, and to me, it's all on the Venezuelan oil. So you can see we just hit above another resistance at 102.96. We ended up just closing below it, and so after hours we're below it as well. So there's always going to be a chance. It says there was a gap up. It's normally a good sign. There's always going to be a chance that since we didn't actually close above that resistance, hopefully we open above it and we move up from there. That would be fantastic to get a little bit of life out of ConocoPhillips. When we look at the earnings real quick, they had negative growth on both of theirs, and they beat the last 4 quarters. They're February 5th. Ooh, that's also exciting. That's coming up here soon. The reason why I believe it is moving is right here. Sweeping oil reform in Venezuela approved. So operators are expected to gain autonomy. That's going to be great. So if ConocoPhillips is a part of this, that is going to be massive for them. Once again, the whole speculative stock, that the reason why I invested in it originally is strictly because of the Venezuelan oil. I didn't really want to own the stock just because I figured that they would probably get the best out of the Venezuelan oil industry, and I think we're in for a treat with it at the end of the day. They do still have decent price performance. You know, they're up a little bit every single year, 170% over the last 10 years. That's not bad by any means. They do have a lot of debt still, so hopefully with this Venezuelan oil, they might be able to pay down that debt a little bit. That would be fantastic. And Texas Instruments. The reason why I put this one in there is because, once again, the earnings. I'm just showing you some examples that earnings, what they report, doesn't always mean everything. So when I go in here, Texas Instruments is actually at a 52-week high. So today they hit a 52-week high. And April 11th, you could have bought it for $139. It's almost it's not quite there yet, but you're getting close to making 80%, 85% if you would have bought at that point. So you can see we ended up hitting a bar resistance at 219.37. So we didn't quite close over that, but after market hours, we are actually above that. That would be fantastic to stay above that and actually come up to this resistance. Once again, this is a stock that I own, but I am going to be setting some stop losses because I did hold all through all of this time, watch it go to, taking my portfolio down with it, just watching it go negative and negative. And then now all of a sudden we got some life in here. So that's fantastic to see. The reason being, and the reason why I wanted to show it to you guys, is growth, not exciting. EPS growth same quarter last year to this quarter, not exciting, negative. And they missed on revenue and earnings. So why did they skyrocket? And this is why we need to actually look at everything. Just like I showed in the video about the top stock picks for January, is because it's not always just about what is flashing in the headlines and, oh, Texas Instrument didn't make earnings. Why did it skyrocket when it missed earnings? Cash flow. Cash flow was a huge factor to this. They killed it on cash flow this year, especially compared to last year. What does cash flow do? That allows them to buy back shares, pay off debt, invest into new ventures, increase their inventory, which is exactly something else they did, is they corrected their amount of inventory on hand. So they should be able to have more earnings this year and more revenue just due to having inventory. That's a big factor of it all, right? So if they have the inventory and they have the cash, then that means they hopefully can take it to all-time highs and they can just kill it this year. So I'm looking forward to seeing that. I am invested in them. I am going to set a stop loss. My stop loss is going to be around that 200 mark, just below 283, just in case we do end up coming back down, because this is actually a company I would prefer not to sell, but I also do not want to miss out on my profits again. So if you guys learned anything from this video, please smash the like button, share it with a friend, leave a comment, see if there's if you got any stocks you would like me to kind of take a look at chart. I can do a deep dive on it, see if it's a buy, a hold, a sell. For me, once again, I'm not a financial advisor, so please don't take this financial advice. I'm just showing you and telling you what I do and why I do it. So, and yeah, look forward to the next one. Bye.